these are facts about the markets during election year. So I'm going to try to talk about the so what sometime behind the fact and what we could do besides it. So cool. Thanks. So that's my initial one. Just that's me, contact info. And since you can go to the next slide now. If anyone gets a prospectus, you can see that the past performance, and I won't read the rest of it because you see that on every prospectus you ever get. Makes me think of a misquote, I'll say, from a Danish proverb. There was a guy named Niels Bohr, or you could say Yogi Berra. It's attributed to a lot of people who said predictions about the future are hard, especially about the future. So what else are predictions about? So we can't try to predict the future, but we do use our past to try to inform decisions. If you look at these, the markets still react positively based on whoever's in the White House. And sometimes people think, well, heck, this party or that party was better than performance-wise. Not always true. If you look under George W. Bush, people call that the lost decade. From 2000 to 2009, we actually lost a little bit of money. So that doesn't always work in the future as far as taking what happened in the past and translating it to the future. The good thing about this, though, from this slide that shows the chart from 61 till now, inflation was only 763%. So if you look at how the market did, it did about 4 times better if you did a $10,000 investment. About 4 times better, I'll take that. Thanks, Kyle. Let's stroll to the next one. And I'm going to run through this fast and let people talk more, maybe have some more time to go. But fact 2, we can have all the tech innovation like the FANG stocks, the Federal Reserve, government. People think that the government and who's in the White House controls a lot more than, gives them a lot more credit. If you look at the technology innovation, the FANGs, that's the Facebook, Apple, Amazon, Netflix, and Google. If you can't see that very well, that's the big stocks, and they're driving a lot of the growth. Good thing about their growth during this time, they're digital companies and they're scalable, so they can keep growing. I don't think there's a limit to where they keep growing. So those keep growing. We work in Zoom. People are doing a lot more virtual working these days. Now, one part of the government that is helping out, the Federal Reserve. They've been pushing a lot more to shore up the economy since this happened. They've been pushing out more and more bond buying, and instead of just buying government bonds, they've been buying company bonds too. So doing some unprecedented stuff. Business profitability. This is earnings week coming out, the end of October, last week and this week. And there are some surprises. One of the good surprises is that surprising upside, 84% of the companies so far that have released their earnings to date, they've beaten their estimates. So that's a good side of it. Some of the earnings aren't as good as they wanted to, especially compared to third quarter compared to second quarter. It's been kind of tough 2 quarters, as you kind of know. But sometimes businesses, investments, technology innovations have a bigger impact than who's in the White House. The election is important, but not as important as people give it credit for. Let's go down to fact 3. So 2/3 of the 23rd presidential elections since 1928, S&P 500 has been positive. Now, some people say, well, what do you count as the stock market? The Standard & Poor's 500 or the Dow Jones? Well, they kind of rhyme with each other. They kind of see who gets a better year. Sometimes the Standard & Poor's 500 is better. Sometimes the Dow Jones is better. But 2/3 of the time, they've gone up in election years. And if you're only investing in the election year, 1 year in the market, we probably should talk about where your portfolio is, because a lot of times portfolios should be spread out better than just in the market, especially like Julia said earlier, 5 years leading up to the retirement. You don't want to be heavily invested in the market. You need to have some in the market for growth, because you can see this trend is upward. This study and this quote, these footnotes, the 3rd year after an election year is usually the charm for the S&P 500. So it's not always the election year you need to worry about. Sometimes the 3rd year is a better one too. So S&P 500 is good. Let's go to the next slide and talk about the Dow Jones Industrial Average. Fact number 4, since 52, Dow's increased an average of 10% in election years. Anyone know how much has increased this year? It's not 10%. It's only up 1.7 year to date last week. But compared to last fall, the Dow Jones is still positive since last October. I checked this morning, it's not about much, but it shows where it was last October, that even after yesterday's hammering, it dropped a lot. The Dow Jones is still up. So when a sitting president runs for re-election, the Dow Jones normally goes up, and we still have the rest of the year, 2 more months for it to watch how it does this year. So the virus death rate, some of the things, I wasn't quite done with that one yet. Some of the things people look at, and why is this going up and why is it going now? The stock market is what's called a leading indicator on the market, as far as the economy. Leading indicators kind of give us a preview of what's coming ahead. So what are the couple of reasons that the stock market might be going up? Well, we already talked about the virus infection rates here, 0.4%. One thing the news doesn't cover very much, but if you look on npr.org last week, they had a story about the virus death rates are dropping. They've gone down 18 to 20%, and that's across all age groups. So the death rates are dropping, but that doesn't make the news very much. People in the markets that invest watch all the news, even the smaller, quieter stories, and they try to factor that in their predictions for the future, even though it's hard. The markets are probably factoring in a success for the vaccine too. This is one of the fastest vaccine trials and getting this far in history. Less than a year in, since January, we might have some effective vaccines that are tested. And for the people who believe, the doctors that say how effective they are, I think they're factoring that one. Now, if you read the headlines, there's probably not going to be government support for the markets right away before the election. Unfortunately, it's just running out of time. But who thinks that the government's not going to step back in and support the markets and the economy and small businesses and Americans after the election? Whichever party wins, they're going to do something within the next couple of months. Now, if you can survive 3 months, you may be in a better position than most, but we'll see what happens after the election as far as supporting the markets. But thanks, Kyle. And next slide for 5. Now, it shows these two little graphics of the Republican and Democrats. The people think, oh, when it comes to the market, which party wins helps out. But the normal variations in the market returns kind of cut any minor differences from president to president. Variations in the market go up and down. And a lot of people think that Republican Party with the rising elephant there is better for the market than the declining Democratic Party there. If you pick those angles, shrug your shoulders and go, which one better? Well, if you look at the stats, sometimes the Republican Party has not been as good while they're in office as the Democratic Party. And if you look at one of the more recent ones from 2000 to 2008, 9, 10, when President Bush was in the White House, there was the Y2K hit at the beginning, and then the FY 2008, 2008, 2009 financial crisis, and that had some down markets. And so not every up market happens during the Republican presidentials or presidents, and not every down market happens during Democrat. So the reality versus the myth is that the president to president doesn't really affect you as much as the underall market and market variations. So let's go to the next slide. Thanks. Fact number 6, long-term investments really rely more on how strong our economy is, not which U.S. party's in the White House. If you look at this one, there were 17 of 18 presidential elections would have increased, but 14 of 18 would have doubled. If you look at that, 14 of 18 would have doubled. That's an average investment rate, over 7% return. So that's a pretty good deal. If you wait 10 years through that time frame and you do invest, that just says make sure you have a long-term perspective when you're doing this. If it is a 4-year or less investment horizon for you right now, we should probably be talking about whether you should have all your money in the market. So please contact one of the financial advisors on here. If you don't like me, work with someone else. Make sure that you're not hanging it all in the market and exposing yourself to too much risk in those 5 years leading up to retirement. Let's go to the next slide. I like the fact on this one, 86.4% success rate. 3 months leading up to the election. Well, we'll see what happens this year. It's all different. You can't, 2020, as everybody knows, is a wild year. So if the S&P 500 is down, then the White House, they better be calling a, 2 men in a truck or maybe 4 men in a truck if they got a lot of stuff in there. But the incumbent often won. I do have one factoid on this one. This should be footnote number 5. It's the same as slide 5. It's the same one, but the markets have been pretty good at predicting, but still 1 out of 6, they didn't do a good job predicting what was going to happen after the election. So this could be 1 out of 6. 2020 is quite an odd year. Can't tell what's going on. And prediction is hard, especially about the future. On the sources page, if anyone needs this presentation or cares about it, I can email you the sources or talk to you about it, but I didn't get this clear to email around the presentation. I'll send you the footnotes. You can look them all up. So what's the so what behind this? There's a lot of facts about markets. I got more of them after reading for this presentation. I can send you those, but what should we do based on an election year? Well, there's one study out that says more than 90% of investors say they plan to change their portfolio in the 12 months following the election. Some people are getting ahead of it and saying, well, heck, if this happens, I want to be ready now. Again, financial advisors can help you do that. But what we probably recommend is that you be confident where you're at. You've already got a good plan. You can be bold. And if the markets do drop, for some people have money ready, that's a buying opportunity. You don't need to wait and watch and go, oh, should I pull it out? Have some money set aside to buy something when the bargain comes up. Yesterday, there was a correction, is what they call it when markets drop. But you can be sure that some people are out there buying. I think Warren Buffett said the stock market's a way for transferring money from the impatient to the patient. So that's the third point. You can be bold. You can be patient. Don't be part of that 9% that's switching over. Market downturn can provide buying opportunities. And the pain may be short-lived too. I mean, it may be a couple of days after the election before you figure out who really won. And that happens, happened in 2000. The country didn't fall apart. The market even came back after the 2000 Y2K hit in that election. So prepare yourself for it. Figure out what you're going to be doing. And then be positive. America is going to come back.